traders, how are you? Vladimir here from Home Trader Club, and welcome to my weekly Forex forecast. We are preparing for the trading week of 29th to May to do the first official week of June 2023. And I would like to take this opportunity to wish you a pre-summer, a happy pre-summer. I hope you enjoy this one. Warm, stable weather, peaceful conditions, and a great time with your beloved ones. In today's video, I have 4 interesting instruments that I would like to share with you. That would be the dollar yen, the euro dollar, New Zealand CAD, and the Aussie franc. The first instruments on the list is the dollar yen, a pair that has very good technical conditions, and I want to explain also what happens and why. But before that, I do have a request for you for your support. If you find value in this video and the trading opportunities, please hit this like button below this video. If you are new to the channel, please subscribe with the subscribe button below this video, and a few words in the comment section would make a great support and great help to me, my work, and the channel. This is how YouTube algorithm works, so any help of you guys is very much appreciated, and thank you in advance to all those who take the time and support my work. So one of the scenarios I was following on a dollar yen was to complete these 2 waves right next to the 100 Fibonacci expansion and the beautiful supply area with a bearish divergence. If that would happen, I would be looking to sell the break of this rising line all the way down to 125, potentially even 120. However, this proves why patience is key. Level is nothing but a level. We need a confirmation from the price. What happened here is that after this little consolidation, the price managed to break through upside, never created a reversal pattern, never created the sell conditions, and the divergence is gone here. There are no lower highs on the indicator. So basically the conditions are very bullish right now for a long run. We do have the higher highs on the chart. We do have the higher highs on the MAs of the MACD, the moving average of the MACD, as well as the RSI. So from my point of view, we should see the dollar yen finalizing its rally. And after any pullback, I would not be surprised if the dollar yen would go further higher. And that's exactly that trading plan right now. 2 scenarios to work with. Let's zoom out slightly. Actually, let's go back to the daily chart. So the first level here is basically gone, never managed to hold. Okay, so we can remove that from the list. The next 2 levels is this swing high around the 142, and the next one, which is around the 145. And the interesting part is the Fibonacci expansion of these 2 waves. 100 is gone, the next one is close to 161.8, which is right here. So that's why here's my trading plan going down to the 4-hour chart. There is basically 2 scenarios to follow, whatever the price would bring us first. So one of the scenarios is the market starts the week with a pullback towards the support or broken resistance, which is now a support, create some good healthy condition. There is also one level here, resistance, which became a support, making the pullback towards one of the zones, and then provided buy opportunities. Keep in mind, this will be also non-farm payroll week, the first week of the month, which usually, statistically speaking, historically, the non-farm payrolls weeks are more positive to the yen pairs. So this would be the first scenario, buy the dips. However, there could be other scenario, of course, that the momentum simply continues and goes straight by making the higher highs, higher lows. Okay, so I'm not going to chase the opportunity. If you miss the rally, just jump in. Comes with always with a risk, because there is always the question where you put the stop loss. But in that case, what could happen if the rally simply continues, I would then be looking for the reversal signs, because we already start to see a potential bearish divergence on the 4-hour chart. While the market is making higher highs, we can see the MACD starts to slow down. Will that complete? We can't guess. Like the dollar yen on the daily chart was showing potential signs of divergence, which never completed. So we can't guess if it will or not, but it's a great potential here, as well as the RSI. So if we start to see the prices keep climbing, however, making fake high and return under a bearish divergence condition, then from the window of the levels I showed you on a daily chart, this is where I would be looking to go and apply the short-term sell. Two scenarios to follow. Well, the first one, of course, would be ideal because we join a bigger trend. Let's see what the market gives us. What do you think about the dollar yen? Let me know in the comment section below this video. How far can you think we will go here? Some of the biggest banks expect the dollar yen to drop down to 125, 123. Some expect all-time high. What do you think? Share in the comment section. By the way, one of the other interesting things why I like the dollar yen at the moment is if we go to the, this is from Home Trader Club, the market trend snapshot. So if we take a look on the pure numbers here, look at the dollar yen, monthly, weekly, and daily, okay? Classical synchronization. So buy the dips would be an absolutely amazing opportunity to join and to ride this one, especially now when the daily chart missed to complete the bearish divergence and it's gone and the conditions remain bullish. So wanted to share it with you. Next one on the list would be the euro dollar. But before that, special thanks to Mugen Markets for supporting my channel, my work, my projects, and our community. And if you want to learn more about Mugen Markets and why I recently joined and trade with them, you can find a link directly below this video in the description, and you will find all the great features they offer, including their PAM accounts and so many more. And again, the link could be found below this video in the description. So the euro dollar is next one on the list, and my view remains bearish after the quick follow-up on the last week. What we discussed for those who follow the analysis in the last week. So we do have key zone here. Okay, it's a pretty straightforward. Broken support, became a resistance, holding here, creating a supply area, bearish divergence on the histogram of the MACD, making it here a positive, negative, lower, positive, making a classical conditions for a correction. Usually, such case brings some ABCD here before a potential return and pullback, or some sort of a range. So fake high here, retest of the previous low, and then a pullback. So with that in mind, the plan was and remains bearish. I expect the euro dollar still to go and eventually retest the previous lows we have here from the weekly chart, and we have a classical demand area here around the 103 zone. So for me, sell the rallies was and remains the plan. Going down to the 4-hour chart, as always, the previous broken levels which hold become important supply areas or resistances areas. So we have this support that became a resistance and managed to hold even here a little bit. Okay, and the one before is all these areas support, holding, and become a resistance. As long as these zones are in hold, sell the rallies for me is my trading plan. I expect nothing more than further bearish continuation on the euro dollar. Okay. Very important thing here is if we plot Fibonacci on the whole movement, we can see some very interesting things. The 38.2 Fibonacci extension meets the previous lows, which behave as a demand. The previous lows here meet around the 50%. So Fibonacci fits perfectly with the demand levels. This is why for me, sell the rallies is a pure plan here. And it's good. I go over that quickly because there is not much more to add and to say when the price behavior remains so clean. And if we draw the rising trend line, take a look what happens here. Oops, sorry. Take a look what happens here. We managed to break and hold below this rising supportive line, which is again a grand confirmation here. Lower lows on the chart, lower lows on the indicator of the MACD, flipping the negative positive to lower negative, lower lows and lower highs on the RSI, fit perfectly for the conditions we discussed before. Sell the rallies, remain the plan. If you are not involved yet, if you are, happy riding. Let me know, what do you think about the euro dollar? How far, how low can you believe that the euro dollar can go? Share in the comment section, please. The next one on the list would be the New Zealand Canadian. Pretty clean bearish channel connecting the lower highs and the lower lows lead us to a key zone right here. Fibonacci extension on the first leg of this move down, bring the 161.8 Fibonacci here, and duplication for these two waves get us right here. So the bottom of this channel meets the Fibonacci extension, which also meet the classical demand area, the previously created low of the big downtrend. Okay, so with that in mind, the plan here is to sell the rallies for further bearish continuation. Going down to the 4-hour chart, here is what happened at the moment here. We do have a sequence of lower highs, lower lows. Okay, no ending conditions or anything close to that. So any pullback, previously broken support that become a resistance, previously broken support that become a resistance, any pullback to one of these zones with bearish evidences should be a good zone to consider the sell and further bearish continuation. I do believe that the New Zealand CAD should go and lead us towards the zone of ideally 080, but starting from 081, that would be paying attention to potential slowing down signs. So sell the rallies remains my plan here. We have a clean structure here of lower highs, lower lows on the 4-hour chart with the daily bearish channel and the Fibonacci expansion that support the further continuation. New Zealand Canadian can be a really good one to follow. So this was the third one on the list, and the last one will be the Aussie franc. Let me go to here, and I want to show you something very interesting. Take a look how the numbers are still negative from the months, the week, and the daily chart. Okay, but how the numbers start to shrink. Usually, it's a sign of a slowdown, and if that fits with the technical analysis, which I'll show in a moment, it should be a great buy opportunity coming within, I would say, time scale of several weeks. I show it now. Yes, it could take time, but pay attention because this one could be a beast. So what do we have here? We have here a huge demand area. Look what happens from this zone. Okay, all these zone, the spikes here. And that's where the buyers managed to take a massive control of the previous trend, a crazy pandemic we all been part of, right? After this zone cleaned and spiked, the buyers are strong here. And I believe that there is a great chance if the market managed to reach this zone, buyers will indeed start to reject back. So besides that, if we go to the daily chart, here is where it starts to be interesting. Plotting Fibonacci extension on the ongoing channel, and what we see here is the following. So we have 61.8 and 61.8 expansion right here, while the 100 and take a look here. It's three classical levels in mind here. First window. Next one is just slightly lower. Absolutely classical zone for the potential reversals. And if we connect the lows of this ongoing bearish channel, we will see that the bearish trend should also end close to there. So does that necessarily mean that the Aussie franc will make this dramatic move before the big turnaround? Not necessarily, and I will explain. Sometimes the market managed to, in such cases when the waves are so big, let me show you what I mean by that. When the trends are so big here, the waves are very big, sometimes it's missing a little bit and could create some sort of a double bottom. Okay, so what I will be following here is when we complete the lower lows and the reversal versus higher lows on the moving averages and higher lows on the RSI. Once this condition managed to complete and cook, then the Aussie franc should start be a great opportunity for a massive rally. And going down to the 4-hour chart, the way I believe we should see that building up is making these waves. So something like that, a slowdown, and the divergence on the daily chart, the divergence on the 4-hour chart. While the market still makes the lower lows, the indicator starts to make higher lows. RSI is very likely to join the party, and from there, some massive buys. So meanwhile, on the short term, the pressure remains bearish, and broken supports that become a resistance could be good opportunities to look for short-term sells. On the long term, though, I anticipate the low to be completed, created, and provide some massive rallies upside afterwards. It's a time scale of several weeks. However, it could happen faster than we expect. So stay tuned and pay attention to this one. So that would be it for this video. Thank you very much for your time watching that. I hope you find the value you were looking for. If you are new to this channel, make sure you subscribe with the subscribe button below this video. And I would like to invite you to join us in our trading family, the Home Trader Club, where you will get your access, full access to our trading courses, real-time trading education, and real-time trading opportunities. We have our weekly live sessions. You are very welcome to join our family with the link below this video in the description. Thank you once again for your time. I wish you good trading. Best to you and yours. And again, happy June and pre-summer to you and yours. All the best. See you soon with more. Bye for now.